Hello, on Saturday the 13th of January, doing an extra Bitcoin update. Because I was already doing a lot of work for the group and I thought, well, let's put out something on YouTube because so many people are wondering where we are or asking me for an update. I'm still bullish for Bitcoin and I think we can go for at least 51,000 in this run. And not starting a big move to the downside here. I'm even more bullish on Ether and altcoins, which I will explain later. But first of all, Bitcoin, we did have quite a drop after the ETF approval. But look, we haven't broken any swing lows. So for now, no reason to be bearish here based on the market structure. So first, if we break that market structure, that structure, and even after a bounce, it would be bearish if we come down again after that. But for now, what I said, no break of the swing lows. Usually after that, you first see a pullback. That didn't happen. And when I go into the lower time frames and look at that recent pullback, and I go to my Elliott wave chart and show you what I'm looking for. I marked that as an ABC correction. Yesterday on Twitter I updated with that green box. We did go a bit lower. Green boxes and even the red boxes, they are potential reversal zones. And I do think this is an ABC correction. You could say when I go to the 1 hour, I can imagine some people say, well, this is 1, 2, 3, 4, 5 to the downside. That is the start of an impulsive move to much lower. I don't think so. Over here, yes, we do have here a first leg, but over here, when you look at the C leg, you can count here 1, 2, 3, 4, 5. That would make the correction in a 1, 2, 3. Where the C leg is in 5 legs. If you want to see this as a 5 legs down, the start of a 5 legs structure down, you need one more down, because look here, 1, 2, 3, 4, 5. This is your first leg, second leg. This would be your third leg. This is leg number 4, which I would expect then to go higher. And then you would have a 5th leg to the downside. So over here, you only have 5 legs to the downside in your 3rd leg. There is not a completed 5 leg sequence to the downside. And even if we do get something like this, 5 legs, I'd still expect a bounce before more downside. Now, what I think what happened here is that if we go to the higher time frame and then we go back to the start of this cycle at 16,000, we have the following cycle. This is the start. Leg number 1, leg number 2, and sorry, that went too high. 1, 2, and here is 3. That is where we touched that red box earlier in the week. So we would be doing now a leg number 4 and then followed by a leg number 5 to complete that whole cycle. So this one is left. This one hasn't been completed yet. If I look at leg number 3, which starts here to there, to 49,000, and measure that leg from the start of that move. Leg number 3 is usually retracing, and leg number 4 to the 236 or the 382 area. And look where we are. We touch 236 and just a bit below. So that is enough for leg number 4 and to go to to start leg number 5. Sure, we could go a bit lower here, but that doesn't fit in what I just showed you before, that we have an A, B, C to the downside. So based on that, I would say this should be enough to go up. Or this is enough to go up already. Even if we would do here 1, 2, 3 and one more down, I still want to see how we go up. Crypto is a bit different than normal stocks, and that often also goes for Elliott wave, which surprises or goes a bit different route sometimes, and it's also why I don't put too much weight into an Elliott wave analysis on lower time frame for crypto. But even if we do make one more low and take out the weekend yesterday's low, then I still want to see how we bounce here, because that we will bounce. That is either already a move to 51, or we do get a weaker bounce and then continuation. But there will be a bounce, in my opinion. If I look at some other indicators, spot versus perps. Look how spot trading in white is holding up. Perps is coming much more down, together with the open interest, which has a big downside already. So OI is resetting nicely, which is nice for. It's usually a good sign that you will see a move to the opposite area. Even if we go down in the higher time frames from here, then I still expect a bounce and to reset the OI again and to play with the more inexperienced traders. But more important here, the spot is, in my opinion, absorbing a lot of these sells, and the down move is dominated, in my opinion, more by perps traders. And when I look, this is when I would be more worried about the downside. If you see this kind of downside in spot, in white, coming down like that, for now, I think it's holding up pretty nicely. TRDR is in maintenance. Okay, that is just happening. That just happened before I started my video. But what I saw in TRDR is a diamond alert on yesterday's dip, meaning that diamond alert happened here, means order book imbalance, and on the lower time frame. So I want to on the lower time frame right now, there is a bit of selling or a sell wall at this level, pushing the price down a bit over the weekend, which is not too worrisome in my opinion. But more important, that on yesterday's spike down, there was a diamond alert for imbalance in the order book and suggesting a bounce coming. The diamond alerts are very good indicators. We also had one here at the top, and here at this spike down we also had one. When I look at another indicator in silico, you can see on the 4 hour, which is I think relevant for this kind of move, it is starting to show a reversal pattern, reversal alert. Sure, could do this sideways over the weekend, which is pretty normal. It will only make this sign stronger. And to give you an idea about previous alerts, so this is one, and this is one. This one bounced stronger and came back down for one more low, but then up again. And when I go further back in time, this is a nicer example in my opinion. Look here, just like yesterday, this spiked down and starting to build that reversal signal and leading to more upside. In my opinion, exactly the same as what we're seeing right now. So back to today, you can see it is starting to bottoming here. When I look at Bitcoin and this move a little bit below that green box, and possibility of making a 5 legs here, I also look at correlation, and what I see in Ether and altcoins is even much more interesting. This is Ether, 1, 2, 3, 4, 5, also suggesting much more upside coming. And when I look at the green boxes, I have one here, 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 all hit. Again, another one here. Reclaim this level, and we go for this move, followed by another correction, and I think Ether should go for 3,000. The Elliott wave is perfect in line here, and in altcoins and in Ether, it is even much better. What I in line with my normal tools, the green and red boxes. So here, a bit of consolidation here. Wait for it to reclaim that level, and it should go up again. There's one thing I forgot to mention. It was on Bitcoin. I don't know anymore. Yeah, well, to summarize, no swing lows broken, no structure in the market, no structural market break. Yeah, sure, on the lower time frames, but this is a higher time frame play, and could go easily sideways over the weekend. We do have a CME gap which is higher, around 43,600, around here. And even if we do one more down, that could be a spike over the weekend in low thin order books over the weekend. But on the higher time frame, for Bitcoin, I do think at least, now I remember what I wanted to say. For Bitcoin, at least a bounce here in the coming week before more down. But as I showed you in Ether, I also think for Bitcoin, it is more likely to see one more up towards 51,000 at least. And then maybe we get that correction, a deeper correction, and also taking out 40,000, filling the CME gap sub 40,000. There is a big liquidity pool here, and I think that move will happen after we go for 51,000.